This tiny American chip company just quadrupled its capacity overnight and landed a billion-dollar contract. But most investors have never even heard of it. Everyone thinks the semiconductor game is all about Nvidia and TSMC making the fastest chips possible. But that's not where the real strategic battle is being fought. Because the next major player in chips isn't about nanometers or speed at all. It's about who makes them and where they're made. And Washington just placed a massive bet on this $2 billion underdog. We're talking about SkyWater Technology. They're a small American chip foundry trying to solve one of the country's biggest vulnerabilities, the fact that we make almost none of our own semiconductors anymore. And in 2025, they just made a move that could change everything. Here's the setup. SkyWater isn't making chips for your phone or laptop. They're a pure play foundry, which means they manufacture custom chips for other companies. Think defense systems, aerospace, quantum computers, medical devices, stuff that absolutely cannot fail and cannot be made overseas. They started as a spin-off from Cypress Semiconductor back in 2017, running this old fab in Minnesota. Pretty niche operation. But then something shifted. The US government looked around and realized we've got a massive problem. About half the chips used in American defense systems are made in Asia. That's a national security nightmare waiting to happen. If Taiwan goes dark tomorrow, our military supply chain is cooked. So Washington started throwing money at this problem. The CHIPS Act, Defense Production Act, billions in funding to bring semiconductor manufacturing back to American soil. And SkyWater, they're one of the only purely American-owned foundries that can actually do this work. They're already a DMEA-accredited trusted foundry for defense work. That's like having a top-secret security clearance for chip manufacturing. Now, here's where it gets interesting. In mid-2025, SkyWater pulled off this wild acquisition. They bought a massive fab in Austin, Texas from Infineon Technologies. We're talking about quadrupling their capacity overnight, from around 100,000 wafer starts a year to 400,000. They went from one facility to two, from 300 employees to over 1,300. But here's the kicker. They bought this thing for basically nothing. The acquisition generated what's called a bargain purchase gain of $110 million. That's accounting speak for, we got this facility so cheap, it's almost suspicious. And Infineon didn't just hand them the keys and walk away. They signed a multi-year supply agreement worth over $1 billion. Infineon is basically saying, keep making our chips. We'll guarantee you revenue through at least 2028. That's $1 billion safety net on day one. The stock went absolutely ballistic, up 71% year to date, up 139% over the past year, from under $6 to over $23 in months. Third quarter earnings, record revenue of $150 million, up 61% year over year. They beat expectations by 11%. Even wilder, analysts expected them to lose 17 cents per share. They made 24 cents instead. The stock jumped 27% in a single day after that earnings report. Now let's talk about what they're actually doing with all this new capacity, because this is where the David versus Goliath story really heats up. SkyWater isn't trying to compete with TSMC on cutting-edge 3-nanometer chips. They can't. That game costs hundreds of billions of dollars. Instead, they're going after what's called mature node technology, older chip processes like 90 nanometer, 65 nanometer stuff. You might think, wait, older tech? That sounds like a losing strategy. But here's what most people miss. Not every chip needs to be bleeding edge. Your car doesn't need a 3-nanometer processor. Neither does a missile guidance system or a satellite or a quantum computer. Those applications need reliability, customization, and chips you can actually trust weren't tampered with overseas. That's SkyWater's lane, and it's a lane the giants mostly ignore. They're also diving headfirst into quantum computing. In the last 90 days alone, they signed 4 new quantum customer contracts. They're now working with 7 quantum computing companies total, helping them fabricate superconducting circuits and custom controllers. Their CEO literally said, "Our goal is to be the quantum foundry." That's bold. But when you're one of the only foundries in America with superconducting chip capabilities, you can stake that claim. Management expects 30% growth in quantum-related revenue in 2025, and quantum computing is expected to explode over the next decade. Then there's the government support. SkyWater already received $35 million from the CHIPS Act to expand an advanced packaging facility in Florida. They got another $16 million from the Department of Defense, and the state of Minnesota to upgrade their Minnesota fab. And they're in the pipeline for more. Every time Washington announces another round of funding, SkyWater is a prime candidate. Here's where things could explode or collapse. SkyWater is targeting $600 million in revenue for 2026. That would be a 40% increase over 2025. They're also targeting over $60 million in EBITDA, which would give them real profitability for the first time at scale. If they hit those numbers, the stock could absolutely rip. You'd be looking at a company that proved it can execute, that secured its place as America's foundry, that's growing 40% year over year in a critical sector. But there's another side to this coin. SkyWater still is not consistently profitable. They're carrying $137 million in debt after the acquisition. They've only got about $50 million in cash. Their debt-to-equity ratio is nearly 1-to-1, which is pretty leveraged for a company this size. They might need to raise more money, which could mean diluting shareholders. In fact, they filed a shelf registration in October 2025, which is basically prep work for issuing new stock or debt if they need to. Customer concentration is a risk. Infineon is now a huge chunk of revenue. If Infineon's business slows down or they decide to move production elsewhere, that billion-dollar safety net gets smaller fast. Execution risk is massive. They're trying to integrate a new fab, ramp up quantum partnerships, build out advanced packaging in Florida, and double revenue in 2 years. That's a lot of moving parts. Any slip, yield problems, equipment delays, trouble hiring talent in Texas could derail the timeline. And let's talk about the stock price itself. After this run-up, SkyWater is trading at 3.3 times sales. The technical indicators are screaming overbought. RSI is at 70. The stock is 120% above its 200-day moving average. That's not sustainable without perfect execution. Insiders have been selling. Over $41 million worth of stock sold in the last few months. Zero insider buying. Now, some of that's just early investors and private equity cashing out after a big run, but it's worth noting the people closest to this company aren't exactly backing up the truck to buy more shares at these levels. Analysts have a moderate buy rating, but the average price target is $21.50. The stock's trading above that right now at around $23 to $24. Wall Street is basically saying, we like the story, but the price already reflects a lot of optimism. So here's my take. If SkyWater executes, this could be a generational opportunity. You're investing in the only pure-play American chip foundry at a time when the U.S. government is desperate to reshore semiconductor production. You're getting exposure to defense, aerospace, quantum computing, advanced packaging, all high-growth, high-margin sectors. The Infineon agreement alone provides a revenue floor. The government support provides political protection. And the technical capabilities, superconducting chips, rad-hard circuits, MEMS sensors, are genuinely differentiated. But you're paying up for all of that. The stock isn't cheap. It's volatile as hell. Beta is 3.5, which means it moves 3.5 times more than the overall market. Short interest is still around 13%, so you could see sharp moves in either direction. This is a high-risk, high-reward bet. It's David trying to build something in Goliath's world, with Uncle Sam providing the slingshot. If you believe in the multi-year thesis of semiconductor reshoring, if you think quantum computing is going to matter, if you think U.S. defense spending on domestic chips will keep growing, then SkyWater is one of the only ways to play that theme. But size it accordingly. This isn't a widows and orphans stock. This is a speculative position in a company that still has a ton to prove. Personally, I'd wait for a pullback. Let the stock digest some of these gains. Let them prove out 1 or 2 more quarters of solid execution. If they hit the midpoint of guidance in Q4, if they land a major new customer win for the Texas fab, if margins keep expanding, then you start to have evidence this isn't just hype. But if you're already in, consider taking some profit here and keeping a core position for the long run. Lock in gains, de-risk, but stay exposed to the upside. So yeah, while everyone's chasing Nvidia and the big AI names, it's these overlooked underdogs like SkyWater that might write the next chapter of the semiconductor story. Not with the fastest chips, but with the chips that matter most when geopolitics and national security collide. And hey, I hope this video helps you on your quest for profits. Catch you on the next one.